What's up, guys? Peter Zane coming at you via Market Find Benzinga with the weekly options outlook. Last week we had Google report earnings, in addition to government finally not being shut down. Excuse the cold. We are going into fall here, and actually is a really fun time for options trading. Overall volatility will be relatively high, even though we are trading at all-time highs on the spot. Honestly, I would be looking for any signs of weakness in the market because this is a perfect time to mask a relatively nice pullback, considering we are in the midst of earnings season. Google is now trading in the thousands with its little brother Priceline, now bigger brother Priceline, which trades up in the 1050s. And I would expect Google to have really nice ranges, anywhere between 10, 15, 20 points. And any big traders out there would be able to move this thing pretty well. So honestly, I would be looking at watching your momentum on the stock, seeing if it wants to fade back or seeing if it wants to continue rallying. I would play 2 to 3 strikes out of the money. Volatility is a little bit high afterwards, especially now that it's worth this much, but you are able to get a good move. So I would watch Google for some really good day trades, really good scalp trades. Um, Again, the entire board right now is relatively a mess. None of the financials or the techs are trading with each other. That is one because we have eliminated the headwinds of the debt ceiling, including the government shutdown. So now that we're in earnings season, what I would pay attention to is honestly letting your trades ride out a little bit. I would be playing equities for any stocks you want to play as for a pre-earnings run-up. I would not play options ahead of them. Remember, when you play options ahead of them, you are buying really, really, really expensive options. Playing pre-earnings with options is very dangerous. Most of the time, people blow out because of this. What I would honestly do is wait for earnings to come out, sell volatility the day afterwards, try to play something at the money for a nice move on the stock. But again, if you're playing before earnings, stay with just the equity itself. Again, we are in the midst of earnings here. Lots of really good news and lots of really bad news coming out on totally different companies. You don't see the Amazon, Googles, LinkedIn's, or Facebook's trading with each other. I would keep an eye on Apple also. She is now holding over 500. Again, be careful of earnings when she does have earnings, but also know that any bounce off 500 may be worth a trade for either a dip buy or a breakdown trade through 500. I would watch that throughout the week. Watch for any pullbacks in the market, see if there's any relative weakness. This should actually help you out if you are going to play any earnings plays or play anything that's a high flyer, because as the markets are turning lower, at the money volatility will increase a little bit, giving you a little bit more of a boost for your options trades. Just know that it's very easy for this market to go sideways and to work out your buyers and work out your sellers. So again, I would be relatively on the scalp side of things, play 1 to 2 strikes out money through Thursdays, sell volatility your Thursdays and Fridays, and just watch for your earnings movers. Watch this Google. I like the way this thing trades, and watch for the casinos for a fade back as well. LVS and Win. All right, guys. This is Peter with Market Find Benzinga with your options outlook. Have a good one.